All right, ladies and gentlemen, I hope you're having a wonderful evening. We're doing the watch list a little bit different once again, and this time it is going to be live. For once again, there's the recap, but if anything, this is going to be quite the watch list. We have a lot to go over. We're going to stay logged on. We're about to go over the long term. We're about to go over some of the trading, baby. Oh, my goodness. I hope you're ready for all of it. We have a lot to cover here. So I'm going to go over some tax loss harvesting. I'm going to show you some real-life examples. We'll see a little bit of the performance this year. We'll talk about what we learned, what we should have learned, and then we'll go over the long-term, the plays. I got all of it for you. If y'all think I'm playing, I ain't playing with you, man. We got all of it. We'll go over every single decision that we made, and hopefully I could leave you with something to prepare you for next year and maybe to what to do with that cash or anything else in between. So I hope you guys enjoy this. If you are watching the recap, I am live right now, so hopefully you go to youtube.com/thestockmarket. I don't know if you guys are familiar with this, but seriously, it's live every day, every live purchase, every trade, man. You see it, does it say, it's not on there? Oh, man, it should be in the second link, but literally, if you just go like this, youtube.com/thestockmarket, and then /live, that'll take you there. But this is the channel right here, man. Every single one of these trades is done live, man. The wins, the losses, all of it, but especially the long term. So bear with me if you're watching the recap. I got the chat in here. We got the whole gang, man, and we like to get a little bit crazy here. So you may watch me get a little bit of ADHD all over the place. We got to talk to the chat, but I'm sure you're going to enjoy this video, and hopefully you can actually learn what tax loss harvesting is, and I'm very excited to show you a real-life example. So chat Adonia. What's up, man? Are you guys having a good evening? What up, Clean Kings? Matthew Warman, Richard Judge, Najee Wolf, baby. Oh, they didn't shadow ban you. Oh, yes, they got you, baby. What up, Kike? What up, H2O? What up, LT, Lord Sir, Carlito, Arleth, Azel, Utnan, Alien, Flavan, baby, Miguel. Good morning. What up, Monica? Victor, S. Duff for Mayor, baby. Evan. Oh, good morning. What up, Andrea? What up, De La Greasy? Wild Style. Ooh. Ooh. I'm doing great, man. Honestly, I mean, there's so much we have to talk to. I'm going to show you my account. I'm going to show you what I destroyed, what I did good on. I mean, I don't know how I feel about it all. So are you guys ready to get into it? I don't know. Let me give you a little bit of a teaser. We'll start with how the account looks, man. God bless me. You know that? I hope so, because this is how we are. You've seen this account. Again, the big spike up here is all from, what's it called? That's from when we transferred from, like, Robinhood or the Tasty Trade. We started moving stuff over to the TD, but I really thought I did bad this year. I am down. There's another trade that's not on this account, but I take full responsibility. I got clapped 40 grand. Actually, I guess it was 20 grand after the covered call on Rite Aid, so you got to factor that in, but I guess it was a blessing and a curse. I really thought I did awful to a degree, but, like, thankfully, like, the last month I did get clapped off of that Bitcoin short, if you remember that. So that was the end of last year, so I kind of, like, where I started from, and then if you're not familiar with, like, the TD Ameritrade and, like, the futures, it really shows you weird balances when it gets below. But at one point, you know, this year I was up at like $170,000. Right now we're sitting at 133. But again, in the 133, you don't see the 33 because we have a lot of future profits just in the last couple of days. When I cash out, it'll hit here and turn back into cash. But as far as equity value, I mean, I'm pretty much right where I started. God willing, we end it like that. So there's a lot of good and bad with all of it, but now this is why I have to show you this, because you really got to see what's up with all of this, man, especially when we talk about this topic of tax loss harvesting. So why I'm showing you this is, like, for you see, again, I'm telling you, I lost. There's other trades, and again, I mean, it's not as bad as really what I thought. At one point, bro, this shit was looking ugly, though. Again, this last couple of months of rally, a couple of good plays, man, it has done a lot, but it was looking real ugly at one point, you know what I'm saying? And again, too, remember, at the end of this year, we were able to walk away with a profit from the year prior due to just we started killing it. Again, we did like 100 grand in that last couple of months leading into the end of the year. And then the bank failure, we profited off of that. And then things started to get out of hand. But like I'm saying, you know, when it's all said and done, though, this is the tricky part about trading. I'm going to go to cost basis here. Again, we're live, we're logged in and all of it. But what I want you to see, January 1st to December 14th, what do you see on here? I have a $33,000 profit realized. Yes. So welcome to the trading world. Your account could go higher, your account could go lower, but the profit that gets reflected, again, it's all based on realized or not. I'm still holding unrealized losses. That's what I'm going to go and explain with you, but I really hope you guys get this point. Why? Because this is what is going to lead into tax loss harvesting. You may have heard this term. You've heard a lot of people, like I'm telling you, it's not like I'm saying, oh, I made so much money, I got a tax loss harvest. No, even if you had a bad year at some point, you could still show a gain if you made money on short-term trades. This is really what you got to think about. So, like, legitimately, you could even have your worst year. This has been one of my worst years, believe it or not. But even with that being said, if I don't do anything by the end of the year, I will have a taxable gain of $33,000. Are you guys with me? Literally, realized gain $33,000. If I do not do anything about that, I am going to have a taxable gain. That'll be as much as $15,000, maybe $10,000 in taxes, depending on the bracket. That's wild. You know what I'm saying? That is literally wild. You could literally lose your money, and then if you're holding the bag on certain plays, and then you only took profits and then end up holding a bag, you will still be taxed on it. So before I get into any of this, I'm going to teach you a little bit, and this is the cool part about this video. I'm going to take some of these losses. That's why I want you to see it now, because by the next time I show you this account, the amount value will probably stay the same unless I make or lose a lot of money in the next 2 weeks. But at the same time, once I take these losses, you will watch my account value stay practically the same, but you will watch the value go down, okay? But this is what I want you guys to understand. Please consult with a tax professional. None of this is a recommendation. That is the disclaimer. It's in the description, all of that. And I truly do mean it, but like for real, like I'm not trying to say this to skirt liability. I'm saying this because this is one of the first steps a lot of people miss out on. And honestly, you are not going to look for a tax professional until you make money. And usually by that time, it's probably late. Remember, you go a year in advance for taxes. So by the end of this year, you're going to be filing by April. And guess what? If you make money in 2024 or whatever happened in 2023, if you don't have anything set up, you are going to be liable for anything. And again, Yellen want that money. So please, go reach out to a tax professional. You could even use Quicken and QuickBooks and all of that stuff. But the easiest thing you could do, call a couple of tax advisors in your area, send them your forms, send them your trading data, and ask them if they have a plan, if they're familiar with trading, and ask if they can literally do anything. A good tax professional, the one you want to hire, is the one who is actually going to look at your stuff and say, hey, I'll look at it. If I could save you money, I'll take you on as a client. Usually if they can't save you, or they're like, oh, this is going to be, it doesn't really matter, then they're going to refer you. But if they don't bring up anything of that nature, they'll say, I'll take you no matter what, then they're not really looking at your stuff. So keep that one in mind. But now, what is tax loss harvesting? It is harvesting your losing trades to offset any capital gains you may have. So I have $33,000 in gains here, and then I still have unrealized trades that I am down on from this year, all within the same 12-month period. So before the end of the year, there's going to be a couple of plays that I will sell out of to lower this amount. So one big play is Pfizer. I don't really want to sell it, unfortunately, but this is the easy one, end phase. I made this play February 7th, so under 1 year, and I'm down $3,000 on 25 shares, 51%, oh my gosh, on equity, right? But here's the deal. Once I sell that, you guys, I'll give you a live update once we get a follow-up, but now that $33,000, it is going to drop down to $30,000. This applies for options as well. Great question. So here's the thing about tax, why people call it tax loss harvesting. You want to take all of these losses, but the idea is if you wait about 31 days, on the 31st day, you could buy back into the same stock, and then if it goes back up again, you're good. If you buy back within the 30 days, so any of these stocks that I sell, Enphase, if I end up selling Pfizer, if I end up selling out of anything down, and I rebuy back before 30 days, you eliminate all tax benefits. It now becomes a wash trade. You cannot rebuy the stock for at least 30 days. So that is one of the big factors there. And here's the next thing, and this is what I've showed you that should make sense. If you've probably heard it before, the max you could write off is $3,000 in taxes. So there's different exceptions if you have trader tax status. And if you actually apply under like a company, you have a trading business, you make more than, I think it's like 200 or 150 trades a year, you would apply for trader tax status. You get a couple of benefits there. Again, this is why you need to consult with a tax professional. But this is why people do tax loss harvesting, because let's say you're on a normal account, you can only write off $3,000. So if you lost $10,000 on the year of realized profits, you could only get $3,000 off of your taxes at the end of the year. And then the other, $6,000, $7,000, you could lower it. You could carry it over and lower it $3,000 every year. So let's say you lost $9,000 this year, right? And you don't have any tax considerations or anything like that, right? You're pretty much only going to get $3,000 written off of your taxes for the next 3 years to get that $9,000. If it's $100,000, you'll have 30 years to do that, right? So this is exactly why people tax loss harvest in this sense, right? Because if I wait until a year where I didn't make money and there's no profits or anything, and I just sell off my losses randomly, you're like, why do you hold some of this and this? And I just sell them off randomly with no tax consideration, and I end up taking a big realized loss. I have a limit to what I could write off. It doesn't really make sense. That's why if I have it within the same 12-month period, or if I have longer-term gains that I want to write off, I could go beyond that. But this is exactly why you do tax loss harvesting, because if you have more losses than any of the gains, you could still, if you made any profits on a big trade, you get lucky, whatever it is, you can lower that amount and use your losses so that you don't have to pay as much taxes. So again, in my case, right now, I have $33,000 in realized profits. If I do not sell anything, I am going to be taxed on $33,000. Even if I lost $5,000 on end phase, I haven't closed it out yet, or $3,000, whatever it may be. So this is why having some of the losses sometimes, you don't want to be a bag holder, but it could end up helping out. In this case now, this is what I plan to do. I am going to be selling off some of these trades. So by selling off the unrealized losses before the end of the year, I could lower this $33,000 down to a lower amount, or maybe even negative. I could even go for 3 years if I really wanted to. I could even go to a negative loss if I really wanted to. That's the crazy part. So like I'm telling you, if I wanted to just flex on you and show I made $33,000, I could keep it on the screen and show you that by the end of the year. I'm going to pay taxes on that. F that, yo. You know what I'm saying? I could even make hundreds of thousands of dollars in a year. Like last year, literally made $100,000 in 3 months. I made sure that I had a loss or at least zero on my taxes. That is what you could do here by using this type of tax strategy. So like I'm saying, you guys are going to watch in real time by the end of the year. Next time I show you guys this account, guess what's going to happen? I'm not going to have $33,000 in realized profits. And now the best part too, for some of these trades, I've already taken losses. It's not as if this is based off of like any, all gains. I've made trades. I lost $1,500 on I already took those losses, so it's already eaten up. That means we made more in profit, but by making sure we book some of these losses, it's getting our taxable liabilities lower. So this is the simple strategy of all of it, man. If you have any questions, you let me know. But for real, I really encourage you guys to consult with a tax professional. And like I'm saying, by the next time we go over this, you're really going to see the magic at work, and it should be pretty fun. I literally to the end of the year, as long as it is on the taxable at the end of the year as a trader here, you're not a mutual fund. You have until December 31st, I believe, or whenever the last trading day is, unless you want to call your broker, but it does have to be able to settle. So, tax strategy, EDM, consult before you sell, bro. Oh my goodness. So yeah. That's a cool little thing. And now, again, like I told you, the trading all over the place. But again, this year, there was a lot of good and bad. And, like, honestly, I do think I was beating myself up a little bit. We went over this here in the beginning, but like, I don't know. It's just because I took a big loss at December. I really thought I started off the year. I was looking at my 170, and that's something that got me fixated because I'm like, damn, I was really doing well in the beginning, and even I had a lot of momentum, and then got in the way with a couple of bad trades, and then again, my NQ short, I got murdered off of it. That's when the NQ short gave me some of my money back, and then again, I rolled over, and I didn't really cut out of that until like right here, like June, July, or the end of June coming into it. That's when I said, okay, I had enough, and then we had to go back from it. But what did I learn from all of this? Honestly, I think these are very good lessons. This first one, bro, is what it is. I think I got too greedy. And what I mean by that is like I don't want this to sound cliche. I want it to be like very informational. And what I mean by that is like, dude, there was a better alternative the whole entire year. You'll see when we get into the long-term review. We're going to go over the long-term as well. So I'm letting y'all judge the trading first. So, yeah, stop playing with me. But like for real, there was a good alternative. There was interest rates at 5%. You could have I had a lot of cash. I was doing great. I was still fairly liquid. I kept going after different plays. And again, I took a really bad NQ short. That's where a majority of my loss came from. As far as like flipping shares and doing that, I took a couple losses. Some came back, but it's like, dude, that is what really hurt me. It was one big trade there. And again, that Rite Aid trade, that was on the other one. But, that was still, again, ugly, hideous. But when it's all said and done, there was a better alternative. I could have sat there and took that money, $50,000, $100,000, $173,000, and I could have got paid like $1,000 a month to do nothing off of bill, $700 a month off of bill. You know what I'm saying? Like that's the craziest thing when it's all said and done. And that's what I really like. That is what you got to learn from it. But that's why I say I got greedy. Rates were high. The market had a lot of high risk. There was a lot of uncertainty. I was wrong in some areas. And that's where it's just like, at the end of the day, I think I was being greedy. I could have taken an alternative. I could have played smaller in some instances. And that's what it is. But the next part I would say that adds to being greedy, and I hope you guys get this, man. Okay? Long term is great. But, dude, if you are trading and there's a great alternative to give you free money and you can make money and taking safer trades, again, even the long term, like, dude, you might be bored because I honestly think I was bored. And I really, somebody asked me if the market is stimulating. I said it's not stimulating enough. Maybe that's my problem. But in a weird way, I think I was just in the moment. There was a lot of news and info, and then you're sitting there all the time, loaded up with a shit ton of liquidity, bro. Like, I'm going to fire that shit off. You know what I'm saying? But, like, for real, get a cheaper hobby or go get a job if you're bored. Okay? I really hope that hits to certain degrees, but that's definitely something I'm able to take away out of this. I think it's a good reminder. I'm always doing stuff during the day. I have a lot of other stuff outside of market hours, but like even then, while I'm chilling there, it's usually a fun time. We could spend time talking with each other, but don't underestimate, man. Less trades, more profits for real. And even then, even one really big bad decision could end up hurting you very well. That's why I say small good decisions, baby. You know what I'm saying? So it's like at the end of the day, though, I don't think I'm the only one who made this mistake, but this is about me right now. But I really do hope that you are able to look in the mirror, though, because this is what I had to do. You know what I'm saying? It's like, why did I do that? There was alternatives out there. Like, I'm trying to explain myself, but I'm not trying to explain it to you. I'm trying to explain it to me. And that's where it's like, for real, dude, go get a cheaper hobby or go get a job if you're bored, because at the same time, I think the boredness was something factored into the bored and greedy, dude, is a fucked up combination. I don't usually cuss on the watch list, so excuse me if anything, but I hope you guys get that because that's something that really stuck with me, and I really think it's going to stick with me in the next year. I didn't shy away from trades even at the end of the year. Again, like I made a lot of money back in this last couple of months because of these last moves. So it's not like I'm saying, no, I'm never going to trade again. And I did, again, I wanted to go neutral at the beginning of the year. And I said that, right? And I said, I'm going neutral. And I just kept making trades, and I had money in Bill. And sadly, the Rite Aid trade, bro, is because I had so much money in Bill getting free money off that. I was like, well, let me take these. I was like, I'm going to get taxed anyways. So let me take some of this Bill yield money and then put it in. And I went. But again, that brings me to the last step, man. You need to find a way to win even if you're wrong, and you need to avoid illiquid trades. Actually, I don't know why I'm saying you. Maybe I'm just used to talking in watchlist format. This is what I fucking learned, for real. And this is where I'm thankful for the long term, for real, because there was instances where I did find a way to win, even though I lost in some areas and I was wrong. Again, I was losing on NQ shorts, but I knew if I had shorts, I'm going to go for some trades to the upside. I was able to benefit off of that to a certain degree. But then again, the long term, straight up, man, that was something that allowed me to win even if I was wrong. And I don't think a lot of people got that. It's just, I'm telling you, this is something where it's like, how, people even ask the politics and what's going on, and they're like, do you thank Biden? Do you thank Trump for the highs and all of this? And it's just like, at the end of the day, I love all of it because the long term is there to sit and work for me. No matter what, the market goes all-time highs, goes crazy. And again, I made the YouTube long term because of what the long term that I had before any YouTube shit. The fact that I could sit here every day for y'all and be here, like, for real. The long term has showed me a lot throughout my years, and I'm glad I learned this early because every other time, bro, I've lived through all of I was still fairly young at these moments, but it's like, dude, you go back every single, like, the worst thing is thinking the market is going to die and then it goes back up. Again, I love that. I've speculated on every one of these moments, and some of you have saw it live, but at the end of the day, it's like, dude, if you were wrong about any of it, wrong at any moment, it's like last thing you want, like, dude, it hits a new high and you have nothing in on it. It's the worst feeling in the world. And that's where it's like, the long term did help in that. But even then, beyond just the long term, like I'm saying, one thing I really was glad that I did, even though I'm not glad that I took bad trades at certain things, I was glad, though, that I did try to balance and diversify. I had NQ shorts killing me, but it didn't stop me from buying on shares. And I was able to make a lot of money there to pad some of the loss. Again, without that, imagine all the trades I lost, and then if I didn't get any of those upside trades, my account would look dramatically different. So, that's why I'm glad I could even talk to you about tax loss selling. Even though the account's not where I'd want it to be at, I still got gains that were able to fight back against it. So, don't use that as an excuse to overtrade, but, like, for real, at the end of the day, you got diversification and you have things that you could balance it out with. So I think that one's very big. And then finally, bro, as far as, like, again, even the NQ trade and shit trades were bad on futures, I could have survived all of that and broke even. The illiquid trades are what messed me up. Again, Rite Aid, illiquid, speculating on BK plays, any illiquid bio. I got one illiquid bio down like $3,000. Literally, the illiquid plays murdered me. They were great when there was a lot of hype, but I should have stuck to the blue chips when I was shorting the NQ. You know what I'm saying? I should have been going for literally Apple, Netflix, Google, Nvidia even. Damn it. Like, you know what I'm saying? And I did make a couple of them, but for real, the illiquid plays, those little penny stock hypers, bro, that's it. Like, I fell back into it. And then the sad part about it is, one, there's an alternative. And you know this, man. You know what I'm saying? This isn't something that I didn't not know. And, again, but I did feel like the market was getting a little hyped. I thought I was smarter and I could take advantage of it in certain ways. But at the end of the day, you're going to walk away being the fool. And, I mean, that's me. I'll hold my L, baby. I'll hold my L. But that's definitely something to avoid. And again, it's going to be weird if we come into next year in the first half of this year. Just keep this in mind once the music stops for middle of next year, because all of the shit caps and the Russells, those are going crazy. So, Chattadonia, I can't wait to show you the rest of this in real time. You'll see how it looks, but I hope that helps before we move into the long term. And again, that's the next thing. That's the crazy part. I wish, again, we had to move the long-term TD Ameritrade ones. They made us move it away. I moved it to E-Trade. I got to move it back to Fidelity. But here is the best part. I can't wait to show you guys this one. But before I do, because take a look. This was the last TD screenshot that I had of the long term. And the long term was below $100,000 by December. Again, I guess it was like right at $100,000 into December. Right at the beginning, it was like $80,000, and then things got crazy end of last year. But this was the last screenshot. I'll show you where it is in real time right now. But You know, that's where it will. I'll show you it in a second, okay? I'm going to hype it up a little bit for you. But this is the beautiful long term, man. It's great, man. It is very, very great. And that's where the beauty of all of this comes in. But before I get into that, do you have any questions? Does anybody have any questions about tax loss selling and that whole process? Or maybe you would like to share what you learned in the chat. You know, people are going to watch this video afterwards. They'll be able to see the live chat. So I don't know if you have anything you'd want to contribute, but any questions on the, again, because I will have a follow-up too. If I can answer anything now, I will. But again, we'll be able to go over it. And don't you worry. My long-term pickup, you'll see. You'll see, man. You'll see. The long-term gets even funnier, man. It's great. Can you cancel your dividend payment? Yes, but I wouldn't try to use it in the long term, if that makes sense. So again, that's why I have a trading account separate, but I wouldn't try to combine your dividend account and your trading account to try to finesse some tax losses. You'll probably wash trade or you'll get effed up in the end. It's not usually worth it. Really, really learn patience. Hold long and stay alive. Best lesson. Don't be homeless anymore. I've learned not to panic. I learned so much about long-term and trading and everything. Big year for me. 12 stocks too many? No, 12's not a, don't add 12 a year. That's like the max, but you could slow it down. 3K max if not trader status, yes. 0 days suck. When were we wrong? Not when were you right? How do you calculate your wash sale? Get your fucking tax guy to do it. You know, and avoid it, and just try to avoid it at the back end, especially towards the end of the year, and just don't touch what you end up selling for a loss, at least for another 30 days, fucking 35 days to be safe. You know what I'm saying? Certain types of dividends get taxed, and some qualified and unqualified, but again, this is where you're going to want to talk to your tax professional about that. All I can say is take your time and making plays. Don't hurry. Okay. Patience. TLT play confirm. We can talk about that a little bit later. You never have too many stocks. Well, over diversification will slow you down, but then again, diversification is good. You could write off per account. Well, it depends how you set them up, but you can, if they are separate, then you can when it's all said and done, but you would need a good tax guy to be able to go through and do that. It's all about balancing those 1099s or the W-9 forms or whatever. I appreciate you, man. God bless you. Control my emotions. Patience for me. I lost so much options. Haven't done my taxes. I'm 20. Well, hopefully there's a gain, or maybe set up tax trader status before the end of the year, and you might be able to find some flexibility with that. Or maybe if you keep, it depends if they're realized or not. Okay, now the chat's going crazy. So I don't know. But any final tax questions? I don't know. Don't know if it is. Oh, we're gonna go over the long term, baby. We are gonna go over the long term. So let's see. It's 30 calendar days and not trading days. Yeah, it's 30 calendar days. Not just, not 30. Even then, it's 30 trading days would be more than 30 calendar days, though. Believe it or not. Oh, they let me dono here. Not the lie, baby. I see you, go. Hey, man. Yeah, your brokerage will send you all the forms. Stopped out considering not using them anymore. I mean, that's without a stop loss, that's the reason why I lost a big amount. Well, that's what some people would like to say, but then every other trade that made me money, I would have blown up my account if I used the stop loss. In all honesty, because then every time I bought Netflix and it was down, I would have lost $7,000 on that. I walked away with $4,000 on that. Some of the Tesla plays, I would have lost $2,000. Like literally every play that ended up making me money, if I did have the stop loss, I would have got fucked up. But at the same time, I held a fucking bad play for 6 months, and I had real conviction in it. And I told you at the end of the year, that was kind of my problem. I told you I was ready to lose it all, and I still feel that way. You know, when it's all said and done, like trading account, going about trading, like for real. If I could, you know, when it's all said and done, like I'm glad how the final months turned out. I think I was a little hard on myself when it's all said and done, but like I'm not really too mad about it. But when it's like, dude, my emotional attachment is not to my money on my trade account. Seriously. And I really think that is where a lot of people are. That's why people use stop losses. Maybe I'm making a really tall claim there, but when it's all said and done, it's just like, don't be. What I'm really trying to say, it's not about a stop loss or not. You understand? Like, that's the fucked up part, is like everybody want to focus on that and like avoid everything else, risk management, diversification, and everything else. Even stop hunting. It's like, no, dude, you shouldn't be trading with an amount that will get you really, really emotional. And you shouldn't be trading with something where, like with your position size where you're like, oh, I'm going to put in $100,000 and stop out 10%. It's like, just trade with $10,000 then. You know what I'm saying? Like, for real, there's that point that goes back to the whole greedy thing, in my opinion, is like you're trying to scalp it and go a lot, and like you don't want to lose that money. It's just like straight risk management 101. Instead of going $100,000 with a 5% stop loss, I only want to lose $5,000. Just go in a trade that can reflect the $5,000 max loss. And that's really how I go about it. So again, like I'm saying with the futures, that was one of my biggest losses. It was like $60,000, $50,000 on one trade, and when it took 6 months, I was like $10,000 a month, pretty much, is what I lost. I should have just got a fucking house, but then again, I guess the mortgage payment doesn't exist anymore now, but. The whole idea is like I was ready to lose that. I was okay with that amount, and why? Because again, I was trading big amounts. I was the fucking 3 months before it, I literally did $100,000 in 3 months. That was $30,000 a month. So I liked it, and I'm down with it. And I was comfortable with that size, but I really had an idea, and I was wrong. Maybe I'll be right later, but. In the meantime, I was wrong, and it got too expensive, and I finally said I'm out of it. And I was buying other stuff along the way, but I really think stop loss or not, man, it comes down to really trade a balance that you're comfortable with and manage your balance. And that is what I really think is the best thing you could learn when it's all said and done. All said and done. So there's that, Chad. But now let's talk about the long term, baby. So with all of that being said, at the end of December, we were like right at 100, right below 100,000. Was this? Oh, no. Was this the account? That might be combined. Oh, never. Wow, that's the combined amount. Holy shit. Yeah, that's crazy. This is going to blow your guys' mind. This is crazy. This is combined. So this is the small account. Maybe to give you an explanation, we have a big account where we put in $2,700 a month. And then we have a small account where we do $270 a month, okay? So I really want to focus on the small account. The big account's awesome, but why? Because I made this small account to show you all of you could do it. $270 a month times 12 months, $3,240. Some of you spent more on weed this year. I hate to break it to you, but if you make $3,240. That would be your deposit of this, reflecting the small account, right? So that's 10% of your income. If you made $32,000 with inflation this year, man, and with some of you being older adults, and I think a lot of you have an ability to make $32,000 a year, no? Do you know what I'm saying? Seriously, you could be a real estate agent. That's like 1 or 2 transactions. That's McDonald's. This is McDonald's level of employment right now. Again, I'm telling McDonald's pay, like, seriously. So that's why I always love this, bro. And for real, if you don't understand why I have this channel, again, the trades are cool and all, but like for real, like watch me for the news and get it there. And then if I do hit a big macro play, you're going to fucking love it. Shout out the RTY and the Yang, you know what I'm saying? But when it's all said and done, it's like, dude, this long term is what is going to change your life. And this is how you get out of the rat race. For real. This is how you take a small amount of money, a small income, and before you know it, yeah, it's going to take long. And, time flies, dude. Time flies of Watchlist, of live streams, of presidents here and there, and everybody saying this and that. You know what I'm saying? But, like, dude, it's like, dude, before you know it, 3 years has gone by. 4 years has gone by. And it's just like, what are you going to have to show for it? And with a little bit of savings and a little bit of gains, and then the crazy part is everything I'm about to show you in the long term, it doesn't stop. Yeah, it could go down, and we've dealt with it going down. You're about to see. But at the end of the day, you have potential now. You be like, oh, my job, I'm never going to advance. I'm never going to make money. I'm never going to do this. Well, guess what, bro? All that savings now, you now have it. You have a little bit of gain, an adequate return. You own something. You have big savings in your account off of a small income. Off of a small income. And then you have potential. You see what I'm saying? You have future potential. So for real, man, this is why we're all about the long term. And I really, really hope this is eye-opening because I'll show you all of them. But now I guess here's the deal. I got to start blowing up the surprises now so you can finally see what's up. But shout out to the small. We have a small account and then we have a big account. These are both of them combined. And this is an old screenshot. Y'all were getting hyped up on an old screenshot. Ain't that some shit? This was the last time because we had to trade out of the account when they moved us out of it. This was the last time I made an MO purchase. So if I took both the small account and the big account, they would be at $140,000 at that time. But again, at the beginning of the year, it was barely over $100,000. At one point, it was like really low 80s combined, right? So here's how that account would look by itself. The big account by itself, it was $126,000, literally below $100,000 at the end of the year, but starting the new year. Oh, I don't know if y'all feel me on this. So that's this big account, and then the small account was at 13. That's where it was when I took the screenshot, but the small account was about $10,000, just under that. So again, even then, your $32,000 income, your 10% savings, you still would have had $10,000 in the bank, right? Well, so like I showed you, combined, this one account though, it was at what? 126. I know I keep saying this number. It was literally $80,000. It was below $80,000, right? Are you ready for it, Chad? You better like the video. Well, that same account is sitting right here, right now, at $154,000 and 718. Yeah, 154 grand. So from 1 year ago till today, 80,000 to 150 and about like I think $30,000 in deposits, but still we could get really, really excited about that. Not to mention everything's at a net positive. And your small account is now sitting at $16,700. So literally, like I'm saying, back to the small account, bro. This is like again, I can show you big money, a bigger amount, but like let's be real, bro. You know what I'm saying? $32,000 a year is your income, and you made that for 3-4 years. You know what I'm saying? Right? And you just sitting there and you working. You now have 50% of your yearly salary sitting in the bank. If you could qualify for a FHA loan, if you're making 30 grand a year, you live in a lower income area, or maybe the houses are cheaper, you have a down payment, and you'll still have money to furnish it. You know what I'm saying? You'll have money. You can do anything that you want, but like I told you, even better is what? You have potential. So now you don't got little money, and when the next bull run happens, if we're about to hit all-time highs, you're not sitting there with a small amount of money no more, even though you only added $270. You're now coming into this next cycle with $16,000 ready to work. You see what I'm saying? So now, like literally, now this could make you like, dude, it made $300 in a day. That's what you would deposit in a month. That's the type of potential that you hold now in this type of an account. So you see what I'm saying? It's going to open up opportunities. If something runs your way, you are going to be able to have this ready to go, and that is why we're all about this. So, Chattadonia, these are your long terms, and it's been beautiful. It's been very, very beautiful. Again, I think so. What's the combined value now? Let's take the combined value, 154,718 and 84 cents plus 16,703.43. Grand total for both combined accounts, $171,000. The irony. It got me back to that March level on the trading account. Just under it. So, Chattadonia. Please get the long term, but we're not done yet. Let's go over what really happened, because are you ready for the fucked up part? Most every long-term play that I added this year was shit, meaning they didn't really net me too big of a profit. I actually lost 40% on one long-term investment this year. So I would have made even more money on the long term if it wasn't for a couple of trades. Now, best of all, that's how we've watched this work. The potential, the ownership, I plan on holding it for 10 years, all of these. We don't really got to worry about it. But what I would want to give you here is the number one question I'm getting asked. Why? Because stocks are at all-time highs right now, and sure enough, nobody wants to think about the long term until they see what I just showed you. Yes or no? Do you not get it? Nobody wants to talk about the long term until they see what I just showed you. Until they see, oh, 80,000. Oh, wow. And like, wow, I did that pretty fast. Oh, wow, I thought it was supposed to be slow. Nobody wants to talk about it until now everything is at all-time highs. If you've been here with the Colt, you've seen it left and right. The new Chads, the old Chads, the random Chads, the greedy Chads, the lurker Chads, it don't matter. The hater Chads, you could throw anybody on that list. So for real, please don't make this mistake. By making a plan today, by setting our, literally, just you go watch the video when I made the first video on this, dude, and it's all on YouTube. We did this all for people on this channel, man, for real. Every single trade documented live, and I only made one sell, which I'm going to go over, but for real, bro, you really got to just set the plan now, start, save your money, commit to it, and once you commit, this strategy does not lose in the long run, and that is what we are going for. And again, you got to make sure you get good plays. There's criteria to it. And, if you have a long-term filled with just EV, ESG stocks and the hype plays, it's not going to work. You know what I'm saying? That's different. But, follow the old boomer Warren Buffett. Shout out Charlie Munger, RIP, baby. That type of philosophy, it's going to get you a long way. I've always said it, man. I've never advocated a strategy that is unreasonable. And this should be reasonable. You know what I'm saying? Save a little bit of your money. Put it towards some stuff. Make sure you get more names you know about. Split it between growth and dividends. It's reasonable. Your parents will be shocked if they see the results. Your wife will be shocked when they see what happens in a year. Again, even my girlfriend, she even know who I am. She still get blown away by it. She like, damn, son. It don't matter, because they'll be surprised. But when you tell them the strategy, it's not something that makes you want to vomit. I'm binary options. I'm gonna trade this. I bought this course on Instagram, and I'm gonna sit here for 7 hours a day, and then we're not gonna work ever again because I'm gonna make $1 million next year. No, you know what I'm saying? For real, it's not sexy, but it has worked, man, and it's not unreasonable for everything that we have talked about. To save a small amount of money, apply it to names you already know about, and balance it out. So. That being said, I know everybody wants to FOMO into stocks right now, and this is the strategy I've said all year. You'll see when I show you my plays. I was shorting on the trading account, and I was still buying in the long term. But we bought Meta, we bought Redfin, Netflix. I think there was one more, Uber even. We had so many plays go crazy at the end of last year, and they were all long-term. Yeah, you could see some of the names. Again, this is where, did we get lucky? Sure, but how do we keep getting lucky every single time? That is the real thing. I didn't log in. Or log me out on there. They're like, it's fake now, Josh. No, don't worry, it's not. Don't worry, you guys see. We changing it out, but here it is. The portfolio. Same account too. I'll make sure you see it. Someone go and call Cap. Load it up for you one more time. But straight up, look at some of these names, and again, it's maybe maybe we're lucky. Maybe it just keeps happening. I don't know. Whatever else it may be, but literally 258% on Redfin, or Meta, 185 on Redfin, 97% on Netflix, 93% on Uber. These were all last year. You know what I'm saying? And those helped out a lot. Maybe the other stuff was adequate, but a little bit of adequate and a little bit of growth, that could make a huge difference. Oh, you guys can't see it? Oh, never mind. Oh, so you didn't I was on the wrong screen. Oh, because I showed my username and all that. I was that's why I have to refresh it. So, yeah, but this is what I was showing you. You go through the account. Again, I'll give you the refresh just in case. But go to the portfolio. I mean, And these were all the trades we literally bought December and October and like August of 2022. And again, all of this done live. If you get, again, free long-term alerts, baby. You even got a text message if some of y'all were really locked in. But like, this is what I'm saying, And then again, the adequate names, the Abby Vice from years ago, still paying us out month after month, giving us income. And that's silly me. That's something I forgot to mention. On the big account and the small account, my dividend yield on this year is 4,400. So you'll notice it says unrealized gain, 8%, $11,000. You could add $4,400 of net profit to that. It doesn't show up as unrealized gain because I reinvested all of it. That was from dividends alone. So I got an additional $4,000 doing nothing. On the small account, I got $400, $440. Oh, what are you going to do at $440? Well, remember, our deposit is $270. So now the third year in, we're effectively getting almost 2 extra free months of money into our account to grow it for as it gets bigger and bigger and bigger for maybe the next bull run down the road. But literally, it's all free. So I got to love it, man. Got to love it. You got 2 extra months for free almost, just under it. So, yeah, and then it keeps growing and growing, man. So it's a little baby, but he's growing. It's beautiful to see. But like I'm saying, man, you had a lot of these plays, and like these could have helped out the stats when it's all said and done. But it's like, for real, you don't even need to make the craziest plays. But, like, I'm not buying the big plays. So coming into this year, and even right now as everyone gets crazy, if you have a lot of cash, whatever it may be, like, don't buy the plays that are up. That's what I've been saying. So it's not FOMO if the stock is trading at a yearly low. If it's at a multiple year low, if it's cheaper than last year, like, it's not FOMO. If you're buying Meta when we're up 300% on it, Redfin, and you're buying, you know what I'm saying? And there's some plays, even Airbnb, I love it, but I wouldn't buy it right now. It's up 100% almost on the year. You see what I'm saying? Like, that's not really what you want to be involved in. So if you really want to start the long term, everything's inspiring you right now, and you've sat on it, great. You need to go find names that are still down. And honestly, this is the thing people don't understand. And if you really are wise and you really care about your financial future, the opportunity you're sitting in right now, whether we crash in 6 months or we run up and then we crash or we never crash, everybody is a sheep. Okay? And I say that humbly. I'm a sheep. That's how the Lord views me. So Lord, have mercy on me. Okay? But what I mean by that is everything like the S&P's up. I can only buy the SPY. Like, dude, there's 3,000 stocks in the stock market. You do not have to buy the S&P 500. You do not have to buy just NVIDIA, Google, Amazon. Yes, we bought them when they were cheap. We have proof. And they did very well. You don't need to buy them when nobody wants them. But right now, the thing that I think that a generation is going to be lost on is them not realizing there is so many good quality stocks out there right now that are trading lower than even 2021 and 2022. You have so many names that are actually trading lower. And that is where, if you want to build out, go get those high quality names. This is the thing I've been saying here. And this is going to be our strategy. Sadly, here's the best part. Guess what? What's my strategy for 2024? Nothing. I'm not changing it. I have the same exact thing that we're going to go over. Literally, I got it over here. Diversification. It's still going to be the answer. A little bit of everything is going to protect you from the unknown and if you are wrong. We're going to diversify, have a little bit of cash. We don't have to deploy it all the way. As long yields will still be a little bit higher. Maybe they end up coming down, but we're going to buy growth. We're going to buy dividend, and we are not going to chase the names that are trading at a higher premium. You got to be cautious towards that. And again, eventually, if you have a lot of cash, if you have more than 50% cash, you better be throwing it out there. Not a recommendation. It's not a recommended option trading stock market. Extremely risky. Only financial investment. Please call financial advice on purpose only. Think around one wonderful day. But you get it. But the strategy is going to stay the same. And like what I've been telling people a lot right now is, for real, go on the S&P 500, find names. Out of those 500 names, you will be able to find so many names that you know about. I'm telling you, it's not a hard task to accomplish. And go find a name that you know about, that you have known about, and that the yield, and I'll just tell you this, if it's a dividend and the yield is above 7%, it's still kind of sketchy. And find out what made it sketchy. Pfizer is one of those. Pfizer's at like 6.5. You need to understand why it went down. I love Pfizer. We bought that, and you'll see when we get over into it. But hopefully you guys understand you still have a great opportunity to build your long term. You don't need a FOMO. And really go find you an anchor. Go find you a really good quality name out there that all these rich effers that you blame for your problems have been owning for the last 20 years already. Align yourself. My long term is my hedge on society no matter what. But it's for real. There's names you know about and have known about. They make a lot of money. They are solid companies, and they're still trading at yearly lows. Some of them pay higher dividends, but it's just like if it does pay a high dividend and it's getting clapped, find out why. You know what I'm saying? That will teach you a lot, and that will show you a lot. So that being said, Chad, that's my little advice and tips for you. Now let's see what we did this year. So these are all the trades. I wrote it out for you. So like I could show you it on the what's it called? I could show you guys on the account, but like it just don't look good. I think, where is it? Like if you go through, is that MP? No, I think if you go, like you click on this one, and like you go through it, like it could take us and show you all the trades. You can see all the dividends. That's the cool part. This is even on this small account. Like you get to watch. This is this whole year. All this is free. That's at $400. Just reinvesting, and you can see the trades, but I thought it'd be cleaner to just write it out for you, just in a little bit of an order of what we did this year. I need a water, bro. We've been live for 50 minutes. Are you kidding me? Wow, I'm loving this. I'm loving this, chat. I hope you guys are enjoying it. 50% cash as in your investment account. So if my small account is $16,000 and I had $8,000 in bill cash or cash equivalents, that's way too much cash. Usually the rule is 20%. No more than 20%. Simple as that. Once you get 20%, just start splurging a little bit on some of the, if you really want to hold that cash. You know what I'm saying? Right now I think I have like 5 or 6% cash on both the accounts, more or less. Because again, I always said it. If you have 20% cash and the market really drops, your 20% is going to buy you 50% more. You see what I'm saying? So, but at the same time with diversification, and like I'm saying, you're like, well, why would I just buy everything if it's at highs? Go find something that you have already, if you have a play that's down, you average down. If you already believed in that play, you start building and stacking on it. Otherwise, you could go and find a name that doesn't have premium and meets a high quality criteria, and that's it. I'm not telling you to FOMO into anything. When it's all said and done, you don't have to. You could go about it strategically, and then you could still get money and bill and yield and get that money. But especially now, if the future, the next 6 months, 7 months, they really do start cutting rates, your bill yield is going to go lower, and all the crackheads are already going to move back into that stock. And then if yields end up coming down even lower, you don't want to be able to underperform. And even if the market crashes and the yields go down, that 20% of cash will still be there for you to buy up, and then you'll have a portfolio build out, and maybe you still got some cushion before the downside. So keep that in mind. But let's see what we did this year. In January, I started off this year with a covered call on Redfin. So not only did we make 180% on Redfin from the end of last year, we also were able to make, I think, 40% of our initial investment back on a covered call, which is going to expire in a couple of days, or like 30 days from now or so. So that was the first play I did on the long term this year. And then I sold out of HBI because they cut their dividend. This was my only sell in the last 4 years of the long term. So we were up on it. We walked away with 38%. So that's the crazy part, because you might get taxed on that. That's the funny part. This is a tax loss video as we're going over everything, right? But here's the funny part about your long term. Do you guys see this account? Hold on, it may not. Yeah, they got switch. You see this? $154,000, right? Even the other $16,000. Yeah, there's no taxes. You will get taxed on your dividends, but I'm glad we reinvested them. Don't you worry. But theoretically speaking, this is the lowest tax liability I have. Why? Because we didn't do anything. All we did was buy. We didn't sell. Even if I made money unrealized, even if Meta is up 200%, I haven't sold it. There's literally no taxes, again, except for your dividends. So that's a fun fact. But we sold out of HBI. That was my first sell due to the dividend. I bought it solely for the dividend. Remember, at the beginning of the year, I said I wanted to increase my dividends, and I did it. By the end of this year, we increased our dividend yield to about $4,400, and I think we ended, it was like 2,000 and some change, I think, at the end of the year. So about 100% increase on our dividends, which is what I wanted to do, and I bought HBI for that. Then they cut the dividend, and they hadn't done it in like 5-10 years. I was like, man, this is bullshit. I sold out, and then I got out of it. And then we started a position at Triple M, 3M at 108. And here's the funny part. Like I said, all of my plays this year, most of them went down. I think only 2 of them went up. But even then, I'm set up perfectly because eventually they will do their thing. 21, do your thing. But for real, MMM, I bought it at 108. March, we started moving into Bill. And again, I started telling you guys, we're going to wait, put any available cash, get your yield on it. So then that way, as we waited, remember, and I stacked up a shit ton of cash from the, oh wait, I was acting like I had the history up here. But I stacked a bunch of cash. So I had some money that my cash went above 30%. So I started just throwing stuff out there and going for these plays. So I got MPW, 849, and then another purchase at 727. And then in April, more Bill, and then more MPW. This was the worst play of the year. But I still believe in it now, especially with rates and everything going up. It might be a very, very good one. But then May, literally the more Bill than Walgreens at 31.98. And then I grabbed PayPal in May at 62.94, and then more MPW at 7.64. And then in June we only did Bill. In July I bought Disney with a decent position. I think like $9,000. It was like 2 or 3 deposits at 88.70. And then we closed covered calls on Airbnb that we sold. And then I rolled a Uber covered call because I was going to be down on it. So I said, hey, let's roll this shit, so I could get way more upside, and it led us to get another 50% upside on Uber without taking a loss in that sense. And I'm about to roll that one over here in a little bit. So it's crazy I'm going to get 3 rollovers. That's just because the stock is so insane this year. But that's what we did. And then August, I added MO. And then on Colt's sister, I only did this. I got to log in. I have to text her right now if I want to be able to log in and show you. But that account did very good. I totally forgot to show that. That one would have been a really, really good flex when it's all said and done. But Colt's sister, I grabbed Walgreens for her because she had like 60% cash because she forgot about the account. And that's a great example. If you just started the account, deposited, held like 5 stocks, yeah, her account killed it still. It was actually pretty amazing. But I told her to get this one here at Walgreens at $25.31. Why? Because she had way too much cash. This was an ultimate value play. I said maybe you should be running it up there. And then in September, we grabbed Pfizer at $34.38 and $34.13. And then in October, we grabbed more MO. And now I am sitting on 2 deposits of cash. And that has been our entire year. Most of the plays got clapped even, and you still got a W. But again, this is something I've been saying for a while. How many times do you guys remember me telling you that, the long term, we want to stack up? And maybe this will make more sense to you, not just some generic shit, because I've told you this a while actually. How many of you remember me showing you a chart of the stock market in 1970 to 1980? Anybody? Does this chart look familiar? And what did I tell you? This is why I said diversification and all of it. Again, every year, bro. Last year was ugly on the long term. I just showed you it was below $80,000. And you saw what the F it just did. But guess what? Even if my gain is smaller, my account is bigger. Y'all ain't feeling me. So if I was down 20% on 80 grand, what's 10% of double that? See what I'm saying? And like we said, year after year, the dividends, the compounding, we play our game, we do our thing, but it's like whenever I want to have size. I want to have size. So whenever it does have the next bull run, the next generational rally, I want size. You see what I'm saying? I don't want to be at the point where now it's like we're bigger and bigger at every level. Every time you're seeing it now, we're moving way more weight than we were before. And that's why I'm saying, end of 2022, it looked ugly. We're down. Plays were down. Plays were in the red. But now it's like, wow, well, now we're glad we have that. Again, same thing even this, all those plays that were down, they rocketed. They did the work for us this year. We added the new things. And think about it. The longer you hold, the less riskier it becomes, right? So it makes sense. You're going to establish new positions. That's the time you're going to deal with the risk. But, the idea is all of these are companies I believe in for the next 10 years, minimum. So at the end of the day, I'm trying to build out my size. I'm trying to build out something where it doesn't matter, because guess what? Right now I'm sitting on the highs. We're doing great. It's like, why don't I just sell out and go do something? That's not my plan. I plan on holding it. I plan on more and more and more. So it's like, dude, this is going to be there for the long term. It's like we really want to build it out. And that's why it's like, don't get too caught up in the ups and downs, the swings, the fear, and the hype. We're trying to build something. We're trying to we're setting foundations. We're building it one room at a time, but we're making it solid. And hopefully, too, we're trying to build a mansion, an estate. We're not trying to just, okay, we'll get this. That's good now. So that is the beauty of the years, the times, and adding. So on that note, Chad, that was a solid hour. A solid hour of long-term tax losses. If you missed it, you could watch back, man. You could even see the account, and you'll go through anything else. You'll see when we do any of the live plays or anything of that nature. But either way, man, it's been a good one. So is there any final questions? I don't think we'll have too much time. I thought I was gonna have time for what's it called? Like a 2K game maybe. It's just getting kind of late here. It is Friday right now, so we'll see. But anything final? Otherwise, you can wait till the follow-up or be on stream tomorrow, because, this is shit we've been saying for years, though. You know what I'm saying? And, honestly, can I just say thank you for real? For real, bro, to, all of the people who actually took this serious. You know what I'm saying? Because I say this every day, and I've said it every day for years, and I'm just saying, man, some of y'all are for real the beacon. You know what I'm saying? Dude, I can't thank you guys enough, because it don't hit the same if it was just me. You know what I'm saying? Fuck you, gay. You don't like me. You think I'm a scammer. You think I'm this. You just mad. I don't know why you mad, but it's just great. Dude, there's thousands of you. A couple hundred in here now, but for real, man, I think confidently we have about I'd say probably a solid 3,000-4,000 huge long-term accounts, big and small, I guess. Maybe I shouldn't say, maybe I'm talking like Dano. They're huge, they're tremendous, they're big, they're great. But, for real though, it's thank you guys for being a beacon. Thank you for carrying the torch with it, because it's different, man. And, we're going to do something great with it, man. And I hope it all makes you guys men and women of means. And I hope it empowers you. And I hope it keeps you out of bad things. But above all else, man, it's you guys are living proof. You know what I'm saying? For real, it is living proof. And, because it's different if I'm the only one just showing it to you. You know what I'm saying? It's I'm not the only one who has gone through this experience. The good, the bad, the ugly. Maybe you copied me step for step, and you're like, wow, you got all of it. But for real, man, it's just a lot of people got this experience, man. And a lot of people are now set up. You see, we live in a world where every year, you thought it was bad last year and people felt behind. People felt complaining. They can't do this. It's dude, this will give you some hope, man. And I really hope it does. But for real, thank you guys, because you guys know it. Damn, some of you get to the point you get more bothered than I do at sometimes. You know that? Because, dude, I've been saying this for 4 years now, every day. Literally every day. We got songs about this shit, man. You know what I'm saying? For real, when it's all said and done, it's just bro, I repeat this so much. I tell people this again. Some of you, like, you know my plan. You know it. I said it only one time. I say it twice. You've been there. You watched. So I really do thank you. You know what I'm saying? And I really hope it has given you the fruit. And I really hope this tree keeps growing as I really think it will. You know what I'm saying? And I really hope that you guys are rewarded and all that. But for real, thank you for doing it, because it is so awesome. And when it's all said and done, man, it's there. And yeah, and you know, like, yeah, listen, it's not just the chat, bro. It's everywhere. Everywhere is toxic. You know what I'm saying? Like, surprisingly, we have a less toxic community than most. But even then, bro, like, that's why I just showed you guys my thing, my account right there. In the last couple of days, I made a killing. You know, I don't talk about it. You know what I'm saying? But it's just like, for real, you'll get people focusing on it. I've had people focus the toxicity, people who only say stuff to get a rise out of people, bring up the politics, but it's just like, just get your long-term, listen, pay attention, get the fruit, plant the seeds, bro, and laugh your ass to the bank. You know what I'm saying? You don't have to, who cares who the president is? We hit all-time highs on both presidents. Republican and Democrat. Sorry, I'm not into that. Tell me where the Franklin. They don't feel me, Chad. Nah, man, for real. But that's facts, though. I don't even say, I'm not trying to boast, man. And if I will boast, man, that's a great place to wrap it all up with, man. You know, I love y'all, and I hope this is good, and I hope it's good for people, and I hope more good has been created for others than myself, because the glory is to God, baby. Finger to the sky all day, bro. If I'm gonna boast about anything, bro, is the fact that I didn't come from this background. My dad, my mom, they didn't teach me stocks. They told me to stay away from it. You know, I didn't have anybody to help me. I've had mentors in life, but no, it wasn't about this. You know, I got this through books and just learning and observing. You know what I'm saying? And it's just like, ultimately, though, God, bro. And I told you, man, it's a spiritual experience when you believe in something in the long term, and you know what I'm saying, and like, and you don't have something, and you watch it come to fruition. So if I am gonna boast about anything, bro, it's like, I hope it is goodness being created, and I hope it is what, you know, I hope this is for the glory of God, because that's the only reason why I think I would have it at this point. So I hope you guys really, really see, but at the end of the day, man, it's like, you know, it's not about, don't get caught up in it, man. You're going to deal with toxic no matter what. You're going to deal with life. Life's going to be good at sometimes. Life is going to be hard at sometimes. Long term's going to look ugly. It's going to look amazing, you know, and that's why I'm just saying, like, I hope this is something you make part of you, and always persist and move forward and face it and be with it, because, like, you see what I'm saying? It's just like, it doesn't matter the president. They want you all focused on this and that. They get focused on this. Pay attention to this. Get mad. Get angry. Fight your brother. No, bro. It's like, bro, the goal of this is to help people out. And even then, you see, as an individual, man, you take care of yourself. You do the right moves. Do it slow. Don't get caught up in the FOMO. Don't get caught up into the Instagram. Well, this guy made this. Who gives a shit? Little by little, baby. Good, bad, the ugly. It's going to do its work, baby. So, Chattadonia, I really hope you enjoyed this video as much as I enjoyed the last hour talking to you about it, and the last 4 years making it. You know what I'm saying? And the best part is, we got several years to go, God willing. You know what I'm saying? That's what's crazy. That's what's crazy. So, Chattadonia, I hope you all enjoyed the video. I'm going to have to dip out on you. I know it's live. Any last one? I got to dip, though, bro. It's an hour. I haven't even showered yet. It's already 7, bro. I still might play 2K. I want to. I don't know. Let me shower. If I got to shower first before 2K, I can't risk it. Because if I play 2K, then I go to bed smelly. You know what I'm saying? No. Best is yet to come. You already know, man. Figure to the sky, baby. For real, man. For real, bro. For real. For real. Riding with the Lord, or is you hanging with the sucker side? You know what I'm saying? Shower, relax. Do we date tomorrow? What do you mean? We have a big day tomorrow, but don't even trip, man. Again, I think the end of the year is pretty much wrapped up, and then, you know, we got some great plays to ride it out with, and we'll see. Either way, I went and got it customized. You know what I'm saying? I went and got it customized. So, Chattadonia, I hope you guys enjoyed it. I hope you have a wonderful evening, man. And finger to this guy. You already know, man. And let's close out this year, man. Let's do it with some flair and passion and love. And spread the love, man, and hopefully the long term, man. Let the long term bring you hope, man, and keep grinding and keep getting better and bigger. You know what I'm saying? So let's do it all. But Chad, I love you. I will see you all in the morning. Have a wonderful evening and peace out. Horn. Yeah, we still get the horn. Let's go. Get a live one. Amen. Amen. All right, man. Y'all have a wonderful evening. Good night.